Your unique story, our global audience. Global One Media.
Hello, and welcome to our series of interviews with decision makers and senior leaders of companies across the board to help you, our viewers, make informed and intelligent investment decisions. I am Munir Barazi, your business analyst and host, and today I am pleased to welcome Robert Nistico, the chairman and CEO of Splash Beverage Group, an innovative company that is presenting new, natural, and healthy beverages that delight the body and inspire the mind. Splash Beverage Group is listed on the American New York Stock Exchange as SBEV. Hello, Robert. Thank you so much for joining us today.
Munir, thank you for having us.
For sure. So could you please tell us a bit more about Splash Beverage Group, your operations and your vision for the future? What is the big story behind how it all started?
Yeah, very good. My pleasure. So think of Splash, everyone, as a portfolio company. We are like a smaller Diageo or a smaller Coca-Cola. We have multiple brands and multiple segments in the beverage space. And this creates a couple of advantages in our opinion. Number one, we believe it dilutes risk. We have multiple brands that can break out at any point in time. We might sell a brand. We might onboard a new brand through acquisition, accelerate that brand's revenue, sell it for a premium, that sort of thing. So we believe it's going to generate a lot of cash for shareholders in the future. And also from a cost of goods standpoint, once you get this set up, it's very, very efficient. It takes a little bit to get going, but we're at that. We believe we're at that inflection point right now. So what's important is we buy cardboard, for example, from the same suppliers, or bottles from the same suppliers. And years ago in U.S. distribution, you used to have to pick whether it was direct store delivery or warehouse or whatever. And today it's more of a hybrid. You can even select how your route to market gets executed. So we have a lot of flexibility, and what that does for us is creates tremendous efficiencies and ultimately brings down our cost of goods and increases our profitability as time goes on.
Very impressive. And so you offer a portfolio of brands that helps diversify your risk, as you mentioned. Could you maybe elaborate on this portfolio and each brand and its unique position in the market?
You bet. I'll start with our original brand, which was TapouT. It's a global brand with global awareness. It's been around, the TapouT name's been around for, probably 23, 24 years. And it was associated with mixed martial arts and the UFC. Whether you watched the UFC or not, or mixed martial arts, doesn't matter. TapouT has a ton of aided and unaided awareness. And our strategy is very simple. When we put it on the end cap of a large grocery store or whatever account happens to be, people are used to 24 years of seeing that logo and that name, and all of a sudden it creates the term is pass and pause, right? They're passing past that end cap, they pause, and they'll pick up that product and they'll look at it, and it creates enough curiosity and trial. And if the product delivers its promise, they'll weave it into their lifestyle. So TapouT is a tremendous brand, globally known brand. We started with a sport drink, hydration and recovery. It's all 5 electrolytes, all natural, highly efficacious, tremendous ingredient panel, lots of B vitamins, lots of antioxidants, and it tastes really, really good. Our nutritionist is probably one of the top 5 nutritionists in the country, and he did an amazing job balancing the ingredients in this product. It's really, really lovely. So we started with hydration and recovery product, much like a better Gatorade or a better Powerade, something like that. And then we'll be launching an energy drink as well that is focused on mental acuity. And we'll start that project in the end of March. And we also have protein powders and things like that we're going to launch later in the quarter as well. So it's really a lovely, lovely brand, and we're very excited about it. And part of our business model, by the way, everyone, is to bring brands to market that have pre-existing brand awareness. If we do that, we're ahead of the game. We break through the clutter by providing offerings to consumers that they already recognize. Really very important distinction. Our second brand is SALT Naturally Flavored Tequila. Really, all you need to know about this product is there are three key drivers in the tequila space. One is flavors. Flavors have been driving rums and vodkas for decades, right? And now even brown goods, Crown Royal has apple flavors, et cetera. So, I never would have expected that. So flavors continue to be a huge key driver for spirits. Also, quality. Consumers today are looking for single barrel bourbon, single malt scotches, and in our case, 100% agave products. So quality is very, very important. The second driver. The third driver is actually the tequila category itself. It is large enough today that it's actually driving the entire spirits segment. So it's a very, very important thing for us, and we're quite excited about it. And then our very first acquisition was a brand called Copa di Vino, single serve wine. Looks just like this. This is it. Really the innovator in single serve wine of quality wine. For years, there have been 4-packs with little glass 187 milliliter bottles in them. Fine product, nothing wrong with it. But it wasn't necessarily quality wine. When we bought Copa di Vino from its founder, he went on Shark Tank, actually, for those of you who know that program, and went on twice, never took the money. So it's a great marketing program for us because the Shark Tank people play those episodes constantly. It's for free. It's great. But this is Columbia Valley wine, and James, the founder, is an amazing winemaker. So we really set the stage for quality single-serve wine, and especially in the United States, it is absolutely on fire. You go to a grocery store and you see an entire end cap of all types of single-serve wine of quality, not just anything in a bottle. So that was our first acquisition. And what came with that was this product, Pulpoloco. If some of you folks are in Europe, you've probably seen this paper can before. It's from a company called Cardican. But with the Copa di Vino acquisition came the rights to Pulpoloco Sangria out of Madrid. It's a lovely liquid. We have 3 different flavors. But even more important than the product itself, with this acquisition came the rights, the exclusive rights to this paper can technology. It's not just recyclable, it's the only biodegradable can on the market. And here in the United States, it's very, very important. We announced probably 3 months ago that we'll actually be buying Pulpoloco from its founder, and that founder, just like Copa di Vino founder, came to work for us. This founder will be running our international business as well. Those are our 4 products at this point, but we're always looking for acquisition targets, constantly evaluating that, and more to come on that. That's the portfolio, Munir.
That is a really remarkable portfolio of brands. And not only have your products become lifestyle beverages, but you also offer great health benefits in addition to your products being environmentally friendly. So very remarkable. And you talked about expanding in new markets, especially when there is awareness. What geographic markets do you currently operate in, and what markets do you plan to expand into in the future?
Yeah, great question. We're currently launching most of the United States as we speak. We're focused in the Southwest and the Southeast US right now, but we announced in a press release actually on Tuesday, which I guess was yesterday, that we're really starting to focus in the New York area especially with SALT Tequila. And TapouT is really, really gaining a ton of traction with the retail chains. I think it's important for your listeners to understand we believe we're at a really important inflection point. When you start launching a product, globally, domestically, doesn't matter. You tend to start in the independent trade, meaning, up and down the street with mom and pops and that sort of thing, or large independent businesses. What's really builds brands. A great comparison is Celsius energy drink. Wonderful company, great brand, right? They lived in the fitness and nutrition channel for a number of years, and that was great. And then when they decided to break out into the national chains, like we are doing right now with all of our brands, that whether that be SALT Tequila or TapouT or Copa di Vino or Pulpoloco, we're actually launching Pulpoloco right now in 7-Eleven. We're launching TapouT in the Southeast and Publix and Winn-Dixie in C-store chains on the West Coast. Once you break out of that independent business and get into those national chains, that's when brands are really accelerating. That's how brands are built. I've been doing this for 29 years. I was the president of Red Bull for a number of years in the United States. We did the exact same thing then we're doing right now.
And as you expand into those new markets, what key metrics do you use to gauge engagement with your brands?
Yeah, another key question. So it's important, obviously, to the chain that your product performs when it's on shelf, obviously, right? So there are measurements here domestically that we call VPOs, volume per outlet, as a minimum threshold to stay on shelf by segment of each retail chain. So convenience stores have certain VPO requirements, grocery stores, mass merchandise stores, et cetera. In our quest recently to really launch into the regional and national chains, everywhere we've gone, each brand has not only met the minimum VPO requirement, but far exceeded it. So we're very, very excited about the early traction and the early performance of each of these brands in the chains. That's really how beverage companies are successful. So you can survive in the independents, but we don't want to just survive. We want to thrive.
Great performance. And let me finish with a future-oriented question. What are your plans for 2023 or the rest of it? And are there any updates that investors might want to hear about?
Yeah, so that's also a good final question. We spent the last couple of years getting organized, getting ready for the chain authorizations, meaning the ability to actually sell into the chains, which is so very important, right? If you live in Europe, it's Part 4. If you live in, well, you understand. So really fulfilling those orders and authorizations for the rest of 23 is very, very, very important. And we have to make sure we do it quickly, efficiently, and effectively. And we're in the middle of that right now. It's very exciting. And I've never seen feedback this positive from the chain buyers out there. So we're going to focus on that the rest of 2023. And we're not giving guidance yet this year on revenue. But if you look at our last Q3 to last Q3, which is public information, we basically doubled our business. There's no reason for that to stop. There's a lot of what we call runway in front of us, a lot of accounts to open. And it's just ours for the taking now that we have the ability to go into the chains and ultimately drive a revenue situation that will benefit all of our shareholders, including myself. I'm a very large shareholder in Splash. I have a lot of money in this business. So we're all in this together, as they say, and we're going to make sure this thing's very successful.
That's a vote of confidence and certainly a lot of potential here. Robert Nistico, the chairman and CEO of Splash Beverage Group, thank you so much for joining us today and sharing those updates. We look forward to hearing more from the Splash Beverage Group soon.
Thank you, Manir.